Hey mate, how are ya? How's your mum? All right, happy days, happy days. It's a Monday. Another great day to be alive. Well, yen is a funding currency. Of course we're going to cover that. Alrighty. So welcome to Forex.Today, the YouTube community of more than 18,000 foreign exchange traders. How coolio is that? So welcome. Well, I'm back home now, Henry. I was on the road earlier. Now I'm back home. Well, anyways, thank you for being here. Let's see. I did a poll. It's interesting. Never did a poll. Never did no poll before. End poll. And what does it do? That's it? Wait, what? So what happened? Oh, here we go. Cool. What currency do you want covered most today? Euro wins by a landslide. Very, very cool. All right, so we're going to start with euro dollar, and we're going to start with euro yen. So without further ado, let's get going. But after we do euro, we will cover Bitcoin, gold, and oil as well, and some other currencies. Oh, and the calendar. So much to do, so let's get on with it. Let me remind you that trading is risky. It's not appropriate for everyone. Your past performance, good or bad, however, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey! Hello, good morning. My name is Wayne. I'm a currency trader just like you. We are going to go on this journey we call Forex together. So what you do to participate is you ask some questions, and I will try to provide some feedback based on my almost 20 years of experience as a foreign exchange trader. Full-time foreign exchange trader. So that's cool. So we can cover technical analysis, fundamental analysis, trader psychology, seasonality, whatever. So ask questions, get involved, take notes. This is educational. I'm not here to put you into trades. If you want to go to a get rich quick live stream, there are plenty on YouTube. Go find them. I don't feel like I'm charged with the duty of making decisions for you. Instead, I'm going to treat you like an adult and then help you make informed decisions yourself. It's your life, it's your money, it's your future. You need to make your own decisions. Cool. So we'll take a look at the markets, but one of the things I desperately want to do, is cover the calendar and look at all the amazing risk events this week. Now, just a little heads up, one of the things not on the calendar is just simply earnings season, and I believe 50% of the market cap for the S&P 500 is reporting this week. So big companies are reporting this week. So that's also maybe going to impact what we do. Okay? So we will keep that in mind, but also then go through the calendar. Oh, and by the way, I got a new cup this week. I don't really understand like the cat and the stuff, but it's pretty funny. And by the way, I was shopping with the Jonas Brothers. Yeah, in particular Kevin, and he laughed at this, and I'm like, yeah, I laughed at it too, so I bought it. True story. Anyways, so ask questions, get involved, and get yourself a broker that you trust. You don't trust any brokers? I don't blame you. But Traders Way earned my loyalty and respect on the day the Swiss National Bank lied to the entire world and pulled their peg from the euro. And that was the day FXCM Global almost went out of business, but FXCM in the United States did go out of business. They lost hundreds of millions of dollars. And Alpari Global did go out of business. Now, how is it that a broker goes out of business when the market collapses? Well, maybe they were trading against their clients. I don't know. But those big brokers went out of business just like this. Well, they must have been holding the other side of their clients' trades. That's my guess. Anyway, so I contact Traders Way and I'm like, oh my God, are you okay? Is everything all right? And they're like, yeah, everything's fine. Market crashed, but we're fine. As a broker, we execute our trades into the interbanking system, so we're fine. I'm like, oh, cool. And that's that. So that's not an opinion. That's a real story. That's not me guessing. That really happened. And so I'm like, wow, that is really cool. So if the largest Forex broker in the world essentially went out of business, this boutique foreign exchange broker we call Traders Way demonstrated they actually execute your trades. And I'm like, that is so cool, man. So anyways, that's how they earned my loyalty and respect. Give them an opportunity to earn yours. Tradersway.com. Okay, or maybe you're on Forex.Today and you click here, open up a demo account, play some trades, fast execution speed, narrow spreads, big swaps, world-class customer service, and above-average good-looking people on the management team. Maybe they'll earn your loyalty and respect too, and you're gonna need a broker. So, how about that? Tradersway.com, and then here we are, Forex.Today, and you're like, oh, right there. All right, cool. So let's start here, and then we'll get on with that euro. Okay. Okay. Frank says our currency is going to go extinct because of cryptos. No. Cool. All right, so let's take a look at the calendar. And here we are in the dead of summer. The very last week, July. Okay. And let's see what's going on. Well, I have a feeling we're going to get an uptick in volatility, not necessarily trend, but volatility. And many reasons for that. One of them, like I mentioned, is earnings season is going to hit hard this week. Okay? Not that there's a lot of market participants, but, well, learning about how, let's say the top 50% of the market-weighted cap of the S&P 500 is doing business-wise. Now, we know they're like the big tech companies like Google and Apple and stuff, they're flush with cash. And my guess is what they're going to do is they're going to look at the 10-year T-note, they're going to look at yields right now, and they're probably going to issue some bonds, get money for free, and do some stock buybacks. Maybe that pushes up the stock market until we get to October, and then the stock market will go up again. But there's a lot of speculation in that. But anyways, finding out how they're doing is going to be a big deal, and that's going to happen. So even like Microsoft's reporting this week. So keep in mind that this is an important week, just based on that alone. Okay, great. Zipping over here, okay, Bank of Japan. Pay attention here, pay attention. We're trying to figure out how Japan is doing. Durable goods and stuff, it's too volatile, don't really care. RBA speaking. Okay, once again, we're trying to figure this stuff out. How is Australia doing now? And how do they think? How do they think they will be doing in the near future? Okay, will Aussie go from weak to strong? So things like rising inflation would be a good start, but you can see inflation's really, really low there right now. Okay, you also want to pay attention to things like how is COVID affecting them. And then let's get on with it. Wednesday, a lot of CAD news. Yeah, that's going to be really important, eh? Except it's also Fed meeting day. So maybe you do some CAD in the morning and dollar in the afternoon. Okay? Now, I don't really consider this a live meeting, never really did, but they're going to have to once again say that they are now thinking about tapering. That's going to be very, very interesting. Okay? What should you be watching? Well, let's answer that in a second. Thursday, European unemployment, great. Is anything getting better there? Is anything going on in the summer? U.S. GDP, look, that it's backwards looking. So what happened 3 months ago? Do we really care about that? How come I can't grab this? Look at that, I can't grab it. Come on, Bubba. Can I click it? No. There we go. And then going out on to Friday. So like, do we really care that much? No, not really. 8% GDP. Yeah, but we talked about that a year and a half ago. So of course, but sort of like inflation, is that the real GDP or is that a baseline effect? And that's going to be baseline. That's a base error. So we're not really at that mark, but that's okay. And that takes care of growth. Inflation. So we're worried about inflation being high in the United States. And I say, well, who cares? If inflation's high, it ain't 8%. So if we're growing at 8% and inflation is 3%, then good for us. That's a good sign. But I think all of these are base errors. And then lastly, Friday, European GDP, European unemployment rate. Look, we're just trying to see if things are improving. Okay? 7.9% unemployment is socialist pig dog territory, especially since the crisis was a year and a half ago. Okay? And then CAD GDP. Okay? Once again, I'm hoping like Canada's improving. Oh, and PCE, this is the big one actually. This is what the Fed uses in its models. So PCE is going to be very important, and that'll be a great trading Friday. Okay. Now I want to get back to what did I say? Did I say it over here or GDP? Maybe around GDP. Okay. One of the things I wanted to reemphasize, is that you need to be watching the yield on the 10-year T-note. How many people have been doing this? Come on now. How many people have been watching? I told you weeks ago. Hello. How many people have been watching the yield on the 10-year T-note? Well, as this falls, okay, as this falls, the dollar will get strong. Okay? That's it. So someone will say, wine? What's dollar strong wine? And I'll say, hey, are you watching treasuries? No. Okay? Cool. That's it. So we have dropped from 1.5 all the way down to 1.25. And dollar strong. But I made a prediction. Okay, prediction. Well, yeah, Charlie says, yeah, risk off, but that's not what's actually happening. So it's not necessarily risk off, but you could call it that, but I don't believe that that's truly what it is. But anyways, the idea is the same, okay? I mean, you can't have risk off if nobody's trading. So anyways, what this shows is people have gone to cash and they're holding cash. Okay? Now, I think this could go all the way down to 1%, but it's not a prediction. I don't really care. This isn't like a trade per se. This has everything to do with timing. This is a timing mechanism. Okay? So you can see this kind of topped out here, okay, at 1.6% right around June 1st. But that's when I essentially told you to get ready for summer. So it topped out at June 1st. So check this out. I think this could, not that it will, but it could continue to fall all the way down to 1 or close to 1 until we get close to September. And then September, people will have all this money locked up in treasuries, and then they will convert the treasuries back to cash and convert the cash back into investing and trading. You understand? This is just a lockup of cash. This is summer trading. I told you all about it. Cool. So this says we are not ready yet for your big return to the market. Now, of course, anything could happen is what people will tell you. This might be a random walk around Wall Street. Well, okay, if we go with that idea, anything could possibly happen. You need to be ready for anything. But we also are analysts, so we can't say, well, anything can happen. You can't predict it. Well, you can predict it if you do analysis. And right now, one of the things I would say is the yield on the 10-year treasury, and of course other treasuries as well, is falling, which means there's a bond market rally, which means people are putting cash into bonds. They're not putting cash into the stock market. Okay, great. So they're putting cash into bonds, and they're going to want to deploy that cash. I don't think they're actually buying the 10-year T-note to hold it. I think they went on summer vacation and bought the 10-year T-note to lock in 1.5 or 1.4 or 1.3% interest rate. And then they're going to come back some period and say, well, I don't want this stupid thing at 1.3. So they'll bail on it and they'll do something more with their cash, and boom, we're making money, son. So anyways, pay attention is all I'm saying. I've been telling you, and some of you have been, right? Okay. Can you explain currently in cash and later they transfer into what? I already answered that, I guess. Can you explain? Just imagine, let's put it this way. Maybe let's I've been telling you about like things like rotation and all that kind of stuff. So imagine this is a bit of a rotation. Okay, let's say some firm has bought the S&P 500. Okay, and year to date, they're up 15%. Year to date. Okay, so on June 1st, they take profit. Maybe not on all of it, but on some of it. Okay, great. Then what? Well, they're in the business of buying the S&P 500. So maybe they want to buy the S&P 500 again, or depending on their mandate, they decide they want to buy European stocks or emerging market stocks or something, where they want to have this cash for some other type of investment. Great. So when are they going to reinvest it? Okay. 9-1? Maybe. So what are they going to do? If they want, if they want to be in trades by 9-1, what are they going to do with their money? Do they want to earn 0% for July and August? This might be a very significant amount of money. Do they want that? No. Well, if they, right? So to fill this period here, Okay, on June 1st, you could earn 1.6%. And maybe if they triple leverage their cash, maybe they're earning 4%. So what they do is they move from the S&P 500, take some profit, buy the 10-year T-note, go to the beautiful Caribbean island they take their beautiful friends to, and they sip on their beautiful drinks and sit in their beautiful hotels and go on beautiful sunset cruises on beautiful boats. And then they come back to ugly New York City. I love New York City. And boom, and they're back into new trades. This is like a bank account that pays 5% or 4% if they're 3x on this. Right. No one is selling at S&P 500. I said take profit. Okay. Big difference. And that has to do with a mandate. So for example, when you're now looking at rebalancing, so like what I wanted to say with the rotation is you rotate out of one type of stock into another type of stock, or into one type of sector into a new sector. Like maybe you rotate out of, right? Like for example, so I said, let's say you're up 15%. So you take profit on your FANG stocks. And then your mandate says you have to take some profit. This is rotation again, right? Rotation. So you take some profit out of your FANG stocks, but you have so much already invested that was a mandated in your disclosure document. So now you come back and you buy, you take these profits, and let's say that's $1 million, 1M dollars, and instead of buying FANGs back, you buy banks back. And you're like, well, in 3 to 4 or 5 years, right, yields will be much higher, banks will be doing really well, and that kind of stuff. Okay. And that's not rotation, that's rebalancing. But then the rotation is, the first part is rebalancing. Okay. And then this is rotation from one type of investment to another. It could be from US stocks into European stocks, or from European stocks into emerging market stocks. Okay? That kind of stuff. But do you guys think? On says Chinese indices are dropping. Yeah, so I was long Baidu, and I exited this morning for a loss, in fact. Pretty reasonable, like a 10% loss. So I got out of that quick. But I'll tell you what, I told you I was stuck in northern Wisconsin, right? Do you guys remember this? And I had like a half a Bitcoin at like 30 grand. And now it's 40 grand. So that was great. Great. So I'm still in it. I don't know what to do. I haven't looked at it very closely. But yeah, so Bitcoin went from 30,000 to 40,000. And I wasn't leveraged or anything, so it was just a cash position. But great. Made thousands of dollars over the weekend doing nothing. Wayne, can you explain how you are using RSI and stochastics together for price action analysis? I don't use them together. And it wouldn't make sense to use those two. They're essentially doing the same thing with different math. So to use them together wouldn't make sense. Okay. On says on Binance it went to 48. That's interesting. All right, so anyways, this is showing you the direction of money flowing into the United States. Okay? And one last point I wanted to make, and I told you this I told you this, I don't know how many months ago. I don't know how many months. Let's say 3 months ago. Okay? That I expect this to go to 2% by the end of the year. What does that mean? USD down. Because we know if this is going up, US dollar has fallen. But right now, since about June, we've gone from 1.6 to 1.25. Let's just say 1.2. Okay? Okay? So let me just ask you, I know it's sort of a rhetorical question, but I want to anchor this in your brain. Okay? In May, we were 1.6%. Okay? By the end of July, we're 1.2%. Did the dollar go up or did the dollar go down? How do you remember this experience? Did it go up or did it go down? How do you remember the experience? Because what you remember is what matters. It doesn't even have to be factual. It's just whatever you remember. Okay? So in your opinion, what has happened to the dollar? Now, if anybody says up, isn't that the exact opposite that you were taught? Or that maybe you assumed at one point in your trading career? That falling interest rates would weaken the dollar? That's the crazy part, right? That what you thought was right, and probably what you've been taught you thought was right. Okay? But in fact, interest rates in the United States, and that's pretty significant, has fallen significantly and the dollar went up. So if I think we are going to go from 1%, let's say, to 2% by the end of the year, what would your hypotheses be for the United States dollar? And that's where I am. Okay. Cool. So this is good in general because we do want the weakness. But for that to really stick, you want to see yields rising. Okay? So dollar down, that's good. Yen down, that's good. CAD down, that's not good. Pound going up, so on and so forth. So let's go over there and do euro dollar and euro yen. Boo-doo-boo-boo-doo-doo. No, let's not do that one. All right, euro dollar, euro yen, euro dollar, euro noki, euro yen. I guess we'll do euro yen. Okay. Excuse me. All right, so far we got a beautiful kick off of the WCP. I gotta make that smaller. Okay. Weekly central pivot point. Current target is way up here, plus 131. Okay, so you need this trend to continue. Okay, this is a bit in your way. Okay, now if this rotates down, okay, your target's going to be lower. Okay. So bulls are not going to think about that because remember, bulls have two opportunities, okay? Here and here. If you are a member of my swing trading group, if you've completed the swing trading course, you know that those are your only two setups, Okay, great. Now, the opposite and equal of that, of course, is there's only one bearish setup. There's only one, and it's here. And it's pretty legitimate, and if you ask me, and I think you are asking me. That's pretty legit. I stink. You're like, that's it? That's the only one? And you're like, yeah, well, it's pretty compelling too, isn't it? So if there are bears, they're going to enter in the next, hour. Well, Jimbo, when you say fall, I'm not sure if you mean yield or if you mean price. But either way, yeah, it's supply and demand. I mean, we're talking about one of the most liquid assets on the entire planet. Okay. All right, so if you're a bull, this would be a dumb place to buy. And if you're a bear, you need to, I don't know, start thinking about maybe doing something perhaps, huh? All right, yeah, so if the yield is falling, Jimbo, then people, market participants, now I don't know if they're Americans or foreigners, but if they buy the 10-year T-note, they drive down the yield and they drive up price. So the bigger question though, Jimbo, is why would you want to buy an asset that pays 1.25%? Why in the world would you want that? Why is the bigger question. Why would you do it? Especially if inflation is 2%, which then tells you the real yield is negative. Well, I think what that says is, okay, on the short run, nobody actually cares. Who cares about the inflation? If you're only going to hold it for 3 months, it doesn't matter, really. The second part of it is, well, I guess that's the whole thing, right? Like, if you're buying it because it pays better than a bank and you can maintain your liquidity and you can use some leverage, so now you could triple leverage up, okay, then that's a very interesting why. Now, I don't know why every single market participant bought it, but so I have to read into it like, what would the Wayne do? And then Wayne would say, all right, so we went from January to June. And in my mind, that's half the year. And when that happens, the game changes. Okay? And so in that point, if people went to cash, triple leveraged up on some form of treasury, then we have the September to December second half, right? So is that what is happening? I don't know. I really don't know. But it's not even safety, guys. It's not. You're thinking too big. Oh, it's risk off. Oh, it's it. No, not really. Dude, they're just going to cash. They're just traders. It's not the entire market like pension funds aren't doing this because they buy and hold forever. But it's like the traders of the market. So wealth managers, for example, are not cashing out of the stock market because they buy and hold no matter what happens. They don't do anything. They're useless. They're just in it to steal your 1% asset, right? Your 1% net worth. So they don't do anything when the market goes up or down. They just buy, convince you to buy. So who is actually going to cash? Well, this is hedge fund managers. Okay, great. So this is just traders, guys. I'm reading the market from a trader's point of view. So if they made money here, they're going to want to make money here. And so they'll have to get out of cash and get back into the market. It's not safety, really. They're just, look, they're not going to be, right? They're not going to be paying attention. So imagine if they got a 3x on their position, you know, they're going to earn 4.5% annual return during this period. It's not great, but it's not bad. And then boom, they're going to get back into the market when they come back. Now, I don't know if that's true, but if that narrative is somewhat true, I am likely to make money. It doesn't have to be, right? It doesn't have to be totally true. But your narrative has to make sense. Okay? Now, looking at Euro Yen, we knew this was an out, right? We knew this. Cool. So one of the things I'm hoping to see is upward bound or upward bound, which means it could be up from all the way now. I don't think so, but it could. One of the things I'd like to get is some sort of double bottom. Okay? This is, to me, sort of a deviation from the mean. What I'm most interested is not in the deviation from the mean. Because I'm a trend trader, what do I care about? The mean! I don't really care about the deviation from the mean. I care about the mean. On average, is the mark rallying or falling? Falling. But it's going up now, Wayne. Well, who cares? Okay? I care about the mean. On average, if the market is bullish, then I will buy dips. We're not quite there yet, and I don't expect it there. Okay? Now, you could be buying that as a day trader, as a counter trend trader. This might be your weekly swing. That's great. All the power to you. That's good. That's good. But just realize it's not trending yet. So I'm first and foremost a macro econ trend trader. That's why I say things like, you know, it's not risk off. Okay? It's not risk off that's driving things. It's just trading. It's just the market right now. You put a price action on the sell zone. Yeah, so I told you very, 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 very clearly multiple times, this is an out. Okay? And based on this, you know, you can get the market to go up. You can get green candles from bears. Did you know that? This is the thing. This is a piece that many, many, many of you guys are missing. This is a piece of the puzzle that you are missing. And one day you'll have an aha moment and it'll be really powerful. You can get green candles from bears. Just because there's green candles here doesn't mean there's bulls yet. Now, of course, there's some bulls and some dude on a 15-minute chart's trading this, and that's great. Okay, that's fine. But is this a macroeconomic trend right now? No, it's right? Technically, it's just a retracement back to the mean, a reversion. Okay, that's fine. But much of this is created from the bears exiting. And when they exit, it creates green candles. It's not necessarily people buying. This market is still bearish. Isn't that amazing? Okay, so what do we need before it becomes bullish? Well, identifying a bottom would be great. That means we have to do some analysis, technically speaking. Well, oil B, we have to be technicians, right? And it's really statistical analysis that we're doing. Okay? Okay, so right now I'm analyzing two different trading firms for part of my Oxford algorithmic trading program, and I'm reviewing their trading history and strategies. And of course, what we do is, by and large, statistical analysis. You are, by and large, doing statistical analysis of this market. At what point will it be trending bullish? Why is that important? When you think it's bullish, you know a universal truth. You buy dips. So what should you be doing now? Well, if you believe this market is bearish, then you sell rallies. What does that mean? Well, it means at some point somebody's going to sell this. Cool. Cool. Does it mean it has to happen? No. In fact, a trend trader will eventually be wrong because you buy in an uptrend, you buy the dip, buy the dip, buy the dip, buy the dip, and what? At some point, you might buy the dip and lose money. Cool. That's why you stop. And someone else will say, oh, this is a bearish roll reversal, and they sell. Okay? That's why we need reversal patterns. So you have to stay with it until you get a reversal pattern. This is technically bearish until it reverses. Does this reverse it? No, this is simply where bears get out. Bears are going to try to get back in, and then, based on things like seasonality and technical analysis, we'll have a real nice battle. And eventually, if I'm correct in my investment thesis, Euro Yen will go up by the end of the year. Okay? Okay? Rule-based, right? Oh yeah, Joel, Wayne at fxbootcamp.com. Okay. Hey, by the way, a couple of questions. For those in my live trading group, my portfolio managers, how many people want to get serious in your fundamental analysis of currencies? I need someone to analyze major trends out of China, major trends out of Australia, major trends out of places like Canada, South Africa, Mexico, the United States, where you can give a complete report on the economy now, what has been happening, let's say over the last year, and what you think is going to happen over the next 12 months into the future. I have sent it last week. Look, Joel, if I don't respond in a day, send it again. Okay? Okay? And by the way, in the last week, Joel, I touched the most southern border of the United States, and then within the same week, I touched the northern border of the United States. So I may not have gotten your email going from border to border. Okay, but anyways. Okay. Yeah, amazing. Yeah, euro and dollar. Yeah, sure. Okay. But I need someone in my portfolio manager group to write a report on one of those countries. So I need like 5 or 6 people to to write a decent fundamental situational report, like a sit rep, but also with forward guidance. This is what the central bank's doing. Here's the import-export data of what's going on. Here's what their major trading partners are doing. Here's maybe some of the political things going on. Here's what's going on with COVID. Is anyone willing to do that for me? The second part I wanted to ask is, I'm probably going to be in New York City in 2 weeks. Do we want to get together for drinks on the Harvard Club rooftop? Maybe go for cigars at Carnegie again? Huh? The Carnegie Club? I think these places are open again. Anyone want to do that get together? Okay, let me know. That's right, Frankie. Cool. All right. Cool. So I'm trying to set that up. Yeah. Johnny and Jimbo. We had such a great crew last year. I guess it was a year and a half ago. And it was amazing because it was the day COVID hit, right? The day we went smoking cigars at the Carnegie Club, and the next day all of New York City was shut down. Every restaurant, every establishment, all that kind of stuff. I think by the time I got home, they shut down the Harvard Club. Now, we got together at the Harvard Club, and I gave people a tour, of the facilities, which are really amazing. And then I'm like, let's go up onto the roof. And so we had cocktails and hors d'oeuvres and stuff up on the Harvard Club roof, which is really amazing kind of view of New York City. And then we what did we do? We Ubered over onto the Carnegie Club. That was fun as well. I'll try, KG. All right. Cool. All right. All right. So we want to do that, and I promised to euro dollar. And the funny thing is, it's not even here, but we got euro Aussie twice, so I guess I could change this up. Euro dollar. Lovely. There we go. Yeah. New York, New York. What an amazing town, huh? So that's it. We're only going to get, 5 people meet up at the Harvard Club? You got to see this place, though, huh? Harvard Club of New York City. Check this out. Look at that. Nice. Huh? Anyways, beautiful, beautiful. Anyways. Oh, downtown? Where do you go downtown, Jimbo? You know what I like, Jimbo, downtown is it was a funny memory for me because I was a young man Didn't have a lot of money, but I was there. I think I was doing a press tour. And I was exhausted. I remember at the end of a long day. This is well before Forex. And so I had met with I did probably 8 media interviews, and I was exhausted, and I'm downtown. I don't really know New York City that well. And I'm like, I need to get off my feet, man. I'm hot and sweaty and my feet are killing me. So I'm like, oh, this place looks old. And there's a little sign that says, pub open or something. I walk in and I'm the only person in the room. And I walk in, there's not even a bartender. And it feels like a museum and it's pitch black. It's bright and hot as hell outside, noise and traffic and construction, jackhammers and everything. I'm like, I gotta get out of this town, right? So anyway, so I go into the bar and it's dark and it's quiet and there's nobody in the room and it's mahogany everything and not even a bartender. And so I walk in, I'm like, hello? The bartender comes out and he's like, yeah. And so anyways, he pours me a drink and I'm like, wow, this place is old, huh? And he's like, this is where General Washington hosted his officers for a party at the end of the Revolutionary War. And I'm like, wow. Jimbo's like downtown. Yeah, I got that part. Where downtown, man? Yeah. Well, I'm probably going to stick Midtown. I'm probably going to stick Midtown. No reason to go downtown. All right. Anyways, Okay, so euro dollar. What do we know? Talk to me, Goose. We know that. So you can try to take this up and maybe you get it about here. That's great because at least we're going from this to this and then maybe next month this. Maybe it's this month, but I'm thinking more like next month. I like the west side. What's wrong with the west side? Can anyone start making money with Forex following these trades? You need to learn how to trade before you can follow anyone's trades. Okay. Oh, crime? Yeah. So who asked this? RIPC Trust. So why don't we think about this? RIPC Trust, are you bullish on Eurodollar or bearish? Let's go through a setup. Are you bullish on Eurodollar or bearish? Oh, okay, good. So that means you sell at resistance or you sell at lower highs. So let's try to identify those. Okay. On a weekly basis, this was supposed to be your resistance. Now, maybe it still is. Maybe this 4-hour candle will close and turn red in the next 4 hours. Okay. The second area for you to consider a sell is up in this area. So now you wait. Okay. You see? That's it. That's it. And you can add more layers of tools, but it's not necessary. Okay. It looks quite bullish in the moment, so you wait. If it turns bearish, you can kick it off of here. It's not acting like that at the moment, but it could just because, the market open and volatility returns. But right now that looks pretty bullish on the small time frames. Okay. So you wait. But I can tell you, my opinion is if I was a bear, this is clearly an opportunity and this is an opportunity. Okay. And you wait. So bears now have to use technical analysis. That just tells you the price. It doesn't tell you the time. So technical analysis will tell you the time. So you get here, and then what if it drops like this on a 15-minute chart? Then you sell it. What if it does this up here? Then you sell it. That's it. What most people do is they see a giant green candle and they buy it. It's too late. Okay? It's too late. Okay? Only a fool would be buying it now. Do you understand the basic rule of engagement is if you're a bull, you buy low. There's clearly support here, and this opened on Sunday night at M2. So anybody knows the swing trading, right? Anyone in my swing trading group knows how to set this up. If you're a bull, this is your target. So that kind of tells me the potential for your bearishness is probably at 1850. Because I know short-term bullish buyers buy it there and will exit there, and that will give you your opportunity on the bearish side there. And then that would tell me I'd like to see a double bottom. I'd love to see a double bottom. So this would be the perfect setup for me. A bull bought it here. Then they're going to exit out. A bear is going to sell it there. Okay. And then this is what we're doing in August. That would be perfect. But the funny thing is, that's what I talked about in February. Okay. I talked about that exact setup in February for the month of August. And in fact, I've also told you that in August, okay, we will probably, on this pair, go to R3. Can anybody confirm that? And in September. Oh my gosh. Yeah. Cool. Okay. Cool. Did you click the like button? I don't think you did. Come on now. Kick down, come clean. Don't be a holdout machine. Thanks, Gregory. Gregor Rama. All right, let's just knock out the other stuff quickly. Let's do... Okay. Bitcoin. Yeah, so I'm long down here in the cash market. Okay. Looks like we've lost a little bit. That's fine. I hope. I don't know. 44 would be great. Okay. notice that we're doing what the regular old currencies are doing too. It hasn't busted out yet. Okay, so we're still range bound. Approximately 2 standard deviations from the mean. On the daily anyways. This is something that you'll rarely see. 1 standard deviation, 2 standard deviations. Okay, this represents 95 percentile. So what the frick-a-zee is this? Retardedness. Stupidity. And I think all these people are saying, decentralized, decentralized, decentralized. Cryptocurrencies are awesome because they're decentralized. I'm like, dude, when Elon Musk does this to the market, it's centralized on Elon Musk. It's the most centralized market on the planet. One dude controls the price. He dropped it from 65 to 30, and now he's driving it back up again, and that's that. So it makes me chuckle, actually. And I chuckle better, right? I chuckle better when I'm making money on it, too, so whatever. Oh. Cool. So anyways, it's funny to me. It's ridiculous. But whatever. It's all good. I'm not saying I'm not poo-pooing on Bitcoin. I'm poo-pooing on Elon. Right? And I hope it doesn't. See, one of my concerns is like going through my life journey, you know, learning from your journey versus learning from a book. What I learned from my journey through the Silicon Valley is I was there at the very beginning of the internet age. The very, very, very beginning. Okay? And it was an entrepreneurial renaissance. And I remember gathering as a community so many times as like serial entrepreneurs. And we would talk about the future and all this kind of stuff. I mean, I can't describe it enough, but imagine an entire city being a think tank. And everyone was focused on changing the world. That was the lexicon. Changing the world. Making the world a better place. How can we, as high-tech entrepreneurs, revolutionize the world in a positive way? And then venture capitalists came around and bought into these dreams and helped them come to reality. Then there was a point in time when stupid, dumb, dark, greedy money came to the Silicon Valley so that they can get rich quick. Like dumb venture capitalists, dumb investors, idiots with big cash. And then idiots came to Silicon Valley to also get rich quick by starting some stupid startup with some stupid idea with half-brain schemes, half of which were scams, right from the beginning, and would go out, write a business plan on one piece of paper, and raise $10 million. And I'm like, that's stupid, but they'd get money from stupid people. But what happened is the froth got frothier, and more people showed up to the Silicon Valley to get rich quick, funded by dumb money that also just wanted anything internet. And what happened is they destroyed the entrepreneurial renaissance with their ugly greed and their dumb money. And it ruined it, I'm telling you. Set back the world by probably a decade or more. Okay? And then you got, right? And then you get Microsoft coming in and like buying high-tech companies with amazing ideas and then shutting them down and killing them and forcing companies to buy their stupid Microsoft Word every year. And you're like, what? It went from awesome to bad. And I remember when I was in the Silicon Valley, everyone worked hard. Everyone worked 15 hours a day. And then I remember there was a time right around when I left when people are just showing up like, I need to work somewhere to get rich. And they certainly didn't work nights and weekends, and it just got terrible. So I worry about this kind of nonsense where Elon Musk sends a tweet and I make thousands of dollars without any leverage, which is another way of saying the market went up 25% over the weekend. Like, that's not good. Do you understand that? If you like cryptocurrencies, if you like blockchain technology, if you want to see this industry grow and mature and become a reality, this crap is a threat. Okay? This is a threat. This kind of stuff is going to be a threat. And you'll see governments come in and want to shut this down. And now you'll say, oh, but that's the... Well, dude, put the rhetoric aside and listen for a second. If you have central banks and central governments fighting you over this technology, it's not going to benefit you in any way. And they're like, oh, but we'll all go underground. Okay, you all go underground, but it'll never become mainstream. And if you truly love this technology and this market, you want it to become mainstream. All right? You want it to survive. Yeah. And so you want this type of behavior to stop. Okay? If people say the USD is worthless because it goes up or down 5% a year, then how is Bitcoin going to be taken seriously if it's up 25% over the weekend? How are you going to get institutional investors to invest into something like that? Remember, they have mandates because institutional investors, they're not in it because... right? They're not interested in this. They're worried about risk, and this makes it risky. If you can lose 25% in a weekend, you can lose 25% in a weekend for no fundamental reason whatsoever. And there are mandates, which means there are rules for big investors, pension funds, insurance companies, okay? Endowments. There are big investors that will never be allowed to trade in cryptocurrencies if this is going to happen, if this could potentially happen. And it will kill the industry. So we got to be very, 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 very careful. Okay? Why did it go up 25%? Elon Musk made it. He said Tesla's going to accept Bitcoin again for cars. Boom, it's back on. Okay? One dude is manipulating the market. Okay? Check it out. He said Tesla will take Bitcoin for cars. Then he said they're not going to take Bitcoin for cars. And then he said they're going to take Bitcoin for cars. Meanwhile, did you know that during this period to this period, Tesla reported a $200 million profit in Bitcoin? Not in cars. Elon pushed it. Then he crashed it. Why? He got out. And now he's pushing it again. That's market manipulation and bad. Just bad. Not even addressing whether it's ethical or moral or illegal. I'm just saying if you want Bitcoin to survive, and well, it'll always be here. But if you want the industry, cryptocurrencies and blockchain to survive and become mainstream, we got to shut that down. Okay? So for the love of crypto, that's got to stop. Cool. Okay, gold. Okay. Coming down. Okay. Okay. And here we are stuck in this old trade plan. Okay. You can stay with it or you can walk away. What was the trade plan? Oops, let's do this in blue. The trade plan was this high. Do I have to make it? Here, let's just start over. And I'll change the colors again. And I'll make it a little thicker. Okay? The trade plan was this high predicts a higher low, which predicts a higher high, which then would predict a higher low, which would then predict a higher high. Is that happening? No. So you should consider bailing. Because it might do this. Okay, that's fine. So you can get in it later. But it might also do this. Okay. Okay. So best case scenario is this. Okay. Now bears have permission here. I'm just saying this old trade plan is kaput, ja? Kaput. But we also knew when we were creating it that it's not a likely plan based on seasonality. Man, I can't get out of this. Well, there it is. Okay, based on seasonality. Oh, well, we hit this one. Look at that. So, what do we know? Insert, indicator, custom, price action pivot points, FX Bootcamp Training, LLC. Boom! Is that bullish? Nope. Okay. McAfee got put behind bars because of tax evasion. Cool. And this is just hanging out at 70. All right, well, that's it. I'm spent. It's 10:30 in the morning, New York City time. Thank you for being part of my community of more than 18,000 foreign exchange traders. So Forex.Today makes the world a better place, I think. Thank you for being a client of Traders Way. If not, please visit Traders Way and give them an opportunity to earn your loyalty and respect. Tradersway.com, right-hand corner, bottom right-hand corner. Click on Open Demo Account. Also, thank you for being part of the FX Bootcamp community as well. There's a whole bunch of links under the video description below for resources, to training, to books, to Traders Way. There's all kinds of things, right? Yeah, so thank you for clicking the like button, and thank you for leaving comments. Peace on earth, may the pips be with you.